Hello again. This is Nico. This is our third uh, video in our series about asset management and personal finance. Today I'm joined by my guest here, Peter Schuetz, who is a colleague of mine back in my days in Japan. Thanks for coming, Peter.
You're welcome, Nico. How are you?
We're doing great. Yeah, I asked you to come along because I mean you've made a career out of savings plans, and I just want you just let us know a little bit about yourself and your background.
Okay. I was born in Australia, Swiss parents, back in 1956, so I'm 64 now. I've been around the block several times, and I ended up in Japan in 1979 and I got my master's here. Okay, and then set up a business English school, ran that for 15 years, got sick of it, got rid of it, and then worked for other people, 2 or 3 times and got sick of them, right? Because I saw how incompetent they were. And then I ended up becoming a financial advisor in 2007.
Okay.
Just to backtrack a bit, I became a savings plan client myself in 2003 without knowing anything about them. And then I finally met Jason, our benefactor, and he introduced me to the idea, and I just was all over it, like, white on rice, because it seemed like such a good idea. And yeah, there were fees and there were this and that, but the idea that you could get into these funds for as little as 30 or 40 bucks a month, right?
Really, was that low back then?
Yeah, well, it still is, depending on your provider, of course.
Okay.
I mean, typically, any JP Morgan fund, any of Schroeder fund, you need $25,000 to get into as a retail investor, and they take 5% off the top. Well, if you're going through a savings plan, the provider is an institutional investor, so they get favorable terms on entry fees. The offer is lower. And, the lowest you can put in is 30, with some of the providers, is $30 a month per fund. So,
Wow,
yeah.
Well, let
Go ahead.
me backtrack and just help remind people exactly where we are in this whole asset management situation, right? We've been talking about,
Yep.
A foundation of insurance to protect against catastrophic loss. We've been talking about maybe 3 to 6 months worth of your expenses saved in cash on hand. We don't really need to explain that. That's a pretty obvious idea. You lose your job. There's a pandemic. Something happens that interrupts your income.
Yeah.
Right. And you
Yep.
have this backup cash. Maybe you don't have enough cash to make your savings plan contribution out of your income because of an unforeseen expense. Well, you've got your
Right.
cash on hand and you can replenish it, right? That sort of thing. So just a reminder that,
Yeah.
that this asset management for our viewers, it's all predicated on risk mitigation. So risk goes up the higher we go up the investment building here, right? So there should be no risk
Correct.
down at the bottom. And so the very first real investment that we're dealing with is this savings plan right here. And okay, there is some risk, but it's probably the safest of the investments because of all the risk mitigation built into it, right?
I would agree with that. Yes.
Okay.
I mean, you can't guarantee the performance of the funds, but
No.
typically, the term, the length of a savings plan would be, say, minimum 10 years to up to about 25 years. And the longer, I mean, and of course, we're dealing with a lot of equity, based funds. So, stocks, as go up and down, as
Right.
every day. And they're constantly, flowing and moving, up and down. So nothing's for sure, but as long as you keep contributing every month, there's no way you can deplete to zero. So
Okay.
yes, there is that risk mitigation because you're controlling the input every month. Yeah.
Right. There's
You can't control the outcome, but you can control the input.
Okay. Well, let's back up just a little bit. How about just for beginners?
I'm sorry, you're cutting out, man.
Oh, sorry, you are too. Well, But okay, just to back up a little bit, for beginners, just explain briefly what is a savings plan.
Okay, a savings plan is a contract between you and a plan provider whereby you contribute a fixed amount of your money every month for a predetermined number of years,
Okay.
typically 10 years to 25 years. So you are making a commitment to yourself, all right? And this is to replace any idea of a government pension. Okay, these plans have become very popular because they're not investment plans per se, they are savings plans. A lot of people get that confused. Yes, you know, one of my top clients is now sitting on, he's above water by 10% with all the recent, you know, stock market activity. But when back in March, when, you know, the shell grid hit the fan, and because of COVID, right, he was down 33% overnight.
Right.
So the point is, you know, because it's different to, you know, betting on stocks and stop losses and what have you, you know, the time that you're committed to doing this can often take care of these, you know, variations in value.
So that kind of goes that kind of goes into the next question of the purpose of a savings plan. It's not necessarily to be making short-term gains like on a trade. The purpose is more, in your words, how would you put it?
Long-term security, long-term financial security, so that you don't have to rely on a government pension and what it may or may not be worth at the time that you're pensionable. Okay, you're taking care of your own situation, because the government will not. Government's tax, they don't give.
Well, in fact, it's seeming more and more like with many people's employment contracts that many people aren't even eligible for pensions by the time, I mean, with part-time and contract employment, stuff like this, right? So, yeah, it's a good point.
Unfortunately, you're right. Yeah,
and in the U.S., they're constantly taking away from the Social Security fund, and they're never putting anything back into it. Right, so
now that's going to be broke in 10 years, man.
Probably, yeah.
It's going to be FUBAR in 10 years. Yeah.
Right. Well, how about, so okay, we talked a little bit about this about you know, controlling the input and length of time. So yeah, what is the main strategy with a savings plan?
Okay, dollar cost averaging.
What's that?
Dollar cost averaging is like this. You put in the same amount every month. You can't control the price of the mutual fund units in the funds that you're investing every month. They go up and down. So, you know, you're say you're putting in $500 a month into 5 different funds, $100 into each fund. And, you know, some of the funds do better than others each month. But your money is constant. Your input is constant. So you buy more of poorly performing funds that month, and you buy less of the well-performed funds that month. Sorry about my hand there.
No.
Okay. Yeah, and so over time, it's like a mini rebalancing every, you know, if you know what I mean.
Sure.
And over time, you build up, you know, a certain amount of money in each of these funds, and then at that point, the smart thing to do, like particularly when the markets are high like they are now, the smart thing to do is to identify a repository fund, a fund that you just store all that extra value in, because historically it's shown that it doesn't go down too much during times of economic turbulence.
Right, like it's so like taking a cash,
building, you know.
Yeah, it's like taking a cash position, yes. Not trading, right? Just, okay, too crazy, sit on my hand. Yep. Okay.
Yeah, something like that. Yeah. Okay, and the thing is, it helps to have a good advisor. There are plenty of, you know, advisors out there who are not scrupulous and who you know, can abuse the situation.
Yeah.
Yeah. Like,
yeah.
You know what I mean? Right?
A lot of us have seen that for sure.
Yes.
Well, tell me, who should consider a savings plan?
Okay, anybody who believes that their government will not help them even 10 or 15 years down the road, let alone during their retirement.
Yeah.
So absolutely everybody should have a plan, in my humble opinion.
Well, I mean, even for us now, I mean, you consider how many places, how many people are living in countries where the government support of big business has been so overwhelming, and the support of, people who actually really need money has been very underwhelming. It's pretty obvious that the government isn't there to help us. Yeah. Yeah.
Absolutely true.
Okay, so in the end, what would you say are the pros and cons of a savings plan?
Okay. First one is fiscal discipline. Discipline that you put money away every month and it's hard to get it out. You can get it out if you fulfill certain conditions, but that's not the point. That's beside the point. The main point is that you're putting money away. You can't access it easily on a whim, like you could if it's in your bank account, right?
Like your cash.
So it's the idea that you save, maybe, yeah, okay, yeah. You save 10% or whatever, 15% of your monthly income, and just continue to do that. It's a very good thing to do. Yeah. Now, personally, because I'm the kind of guy I am, I've had two savings plans, and I finished one, and then I invested in another one even before I finished the first one, because I had a little more disposable income to start a second plan. And I have pulled out cash from that 3 or 4 times over the past 11 years when I needed it. Okay. But I'm still way ahead. I'm still way ahead on balance, compared to what I put in. I'm at least probably $18,000-$20,000 above water.
That's great.
And it's worked beautifully for me, because the pros are, if you need cash, you pull it out when the markets are high.
Right.
A lot of people make the mistake of pulling out cash when the markets are low. That's dumb.
So now would be the time to be taking cash out.
Yes, it would, if you've got a valid reason to do so.
Right.
And it's not just consumption, to buy a car or pay for an overseas trip.
Sure.
Like, for example, if you've got real estate, and your renters aren't paying, well, then that's a valid reason to pull some money out.
Or if you've got another investment opportunity that's maybe a little bit higher up that risk profile, you're thinking, okay, I'm going to take 20 grand of my gains here and put it into something that's going to possibly get me a better return.
Well, there's also, but of course you never risk, obviously you take the gains. Okay, if I blow it, I'm not going to cry. I'm not going to complain.
Right.
Right. You have to have that mindset. Yeah.
Yeah.
Yep.
All right. Well, geez, if there's anything else you have to share, I don't think I have any more questions. If there's any fundamental or anything that you think people should know about before we sign off, then any final words?
Yep. Yeah. Well, the thing about savings plans is, you control the input. And of course, they have extra allocation. Like you say, for example, you put in $300 a month, you get an extra 1% on top of that. You put in, say, $850 a month, you get an extra 4. In my plan, I put in $1,250 a month, I get an extra 5%. Well, over the life of a 15 to 20-year plan, that is a huge difference.
Sure.
Okay.
That's a guaranteed 5% gain.
Yeah.
So long as you can afford it.
Yeah, exactly. So you got to, of course, you've got to be able to afford it. Yes. So you save according to your means, and let time take care of the rest.
But what did you say? You get a 3%? No, what kind of bonus do you? I mean, if you get a 3% bonus, that's helping you with inflation.
Yes, it is. That's right. You would need $600 a month for that.
Okay.
You need to put in $600. All right. So I'm just saying that most people who have a proper job, they can afford $600. Yeah.
Yeah.
I'm still thinking that that's the case. So again, I call it sleep at night money. You put it away and you just forget about it.
Well, it's the same reason. The same reason you have an insurance policy is so you can sleep at night. You don't have to worry about what ifs.
Yeah.
Very good.
That's right. Yeah.
Well, Peter, thanks so much.
Yes, Nico.
Yeah, thanks so much for joining me and helping to explain this. I I've been kind of preaching to the group, and it's good to get somebody to join me and let people know that there are more of us out here who know things, who can share things. I hope people ask questions.
Yeah, no,
People,
it's a
yeah,
pleasure to be able to contribute.
thanks a lot. Well, maybe I'll reach out to you again if we've got another item on the list that we can work together on there and help explain better. Thanks a lot, Peter. We'll see you next time.
Anytime. I'm always available. I'm always available. All right.
All right, everybody. That was that's savings plans. Again, if you have questions, put them in the comments section. I'm sure Peter would be happy to help to talk about anything that you might have a question about. And we'll catch you for the next video the following week, which should be about lump sum investing and how it's different from the savings plan. All right. Thanks, guys. Goodbye.
Okay. Ciao, everybody. See ya.